Good afternoon, Maverick traders. It's Joe with you here on some Monday, the 27th of June. Let's get into the market roundup. I got my 2 cents on the markets. I'm going to give them to you. Take responsibility for the outcome, whatever you decide to follow along. You know the drill. So, all three of the indexes, the majors, I should say, including the Russells, actually popped up a little bit and just kind of parked themselves at resistance. Now, folks, I didn't think they were actually going to get there. On Wednesday's class, I was thinking, and actually in Thursday's roundup, that the markets might stall out and actually hit a lower resistance point. But Friday came in like a bull, and it came in aggressively. And it was really cool because it pushed it all the way back up to previous resistance levels. And so today we kind of parked, as expected. Guys, it's still a bull, or I should say a bear rally, excuse me. This is a bull move off of a bottom, and it is still a bear rally. Is this the bottom? Way too early to tell. So the Dow, the S&P, and the NASDAQ pretty much flat for the day. Russell's as well. Oil had a pretty good spike. It's above about 109, I think, a barrel right now, but it came off aggressively. That's something we really need to keep an eye on because that could create a little bit of ominism, or I should say pessimism, right, in the markets moving forward. So if oil and energy continues to expand, it could cause some bearishness in these markets. Gold pretty much flat on the day. So the S&P had a good bounce. I was thinking 380 might be its new settlement level, and if it was, I was going to be I was going to have a much more pessimistic attitude going into this week. However, Friday was really nice to see a Marabozu candle, which means it has no shadow on the bottom or top. It closed on the highs, it opened on the lows, and went straight up. That's a very strong, predominant move overall. However, the volume, kind of not very impressive. Decreased over the last couple of days, subsided. Today's volume was a little bit of a, well, what do we do now? It is a Monday. I'm going to chalk it up as such. However, folks, if I was just to chart this, my money is much more, I should say predominantly to the downside, looking for a bearish trade, some sort of a bearish pivot here, looking to push back down to the 370, 365 levels. That being said, it's got to confirm, right? So the Qs, same idea. This pushed up a little bit higher. This was actually at its resistance level, showing that it did have a little bit more of substantial of a bounce. This is something that's a lot more tumultuous, or say volatile. And it did park itself right around that 20-day moving average, not showing signs of bullishness at all by any means. It could show the beginning of what could be bearish. Now, with that being said, I don't see why we wouldn't just kind of stagnate here for at least a little bit. There's no rush to sell off without any more bad news, but there certainly isn't any reason for us to throw money into these markets thinking that this is the bottom. It's too early to tell either way. Friday really did, and folks, I think we're really underestimating it. Friday really did correct a lot of pessimism in these markets. So overall, here's the heat map. Everything's pretty much brown and red. The strength was in the defensive, right? Healthcare, energy, so on and so forth. Basic materials did slip a little bit. But overall, just kind of a market that doesn't really know what to do with itself. It's too early. It is Monday. So we'll see if it's going to subside, go sideways for the week, or hang itself on any sort of events or news, which is yet to come. So guys, I do not have much to go off. I had a bearish outlook on the monthly, and I'm going to stick with it. We are definitely way into the -3. You can call it -2 just because of the rally that I had on Friday, but this is a classic. It doesn't get any more clean bear rally in a downtrending market below its averages. I don't know. If I had to take a snapshot on explaining what a downtrend is, this would be the one I'd use. Past that, we're at resistance levels. Are we going to roll over tomorrow or the next day or the day after? I'm not going to try to guess that. I don't have to guess that. That's why we wait for pivot points to be established. So keep that in mind. Best to just stand off and see what happens. There's no reason to try to catch a top here. There's no reason to think that was the bottom here. We're not trying to hit the bullseye here, folks. Let's just wait for that dartboard to stop moving, and then we could start throwing our darts once we get something a little bit more established in an overall trend or confirmation. I'm cool doing something sideways to down at this point, but wait until it confirms. That being said, there's a bunch of trades out there, both bull, sideways, and bear. It just depends on what you're looking at, and more importantly, folks, the time frame. I've got a whole bunch of bears here, but one that just jumped out at us was Baidu. Bulls. Sorry, folks, a whole bunch of bulls. The first one that I thought jumped out at me was Baidu. This was really cool. In an ascending triangle pattern, we got a bullish crossover with the 2050 that happened early June. Obviously, it didn't happen until later this month, but we are back up to resistance levels. Now, if you want to be a little bit more reserved, wait for this thing to get above the 160 mark. You could play this 155, 160 diagonalized if you think that it's going to continue higher, something sideways to up. But if you guys want to chase momentum and truly believe that the markets are going to consolidate and move higher from here, you can get aggressive. But there's no need to. There's money in this. Take a look at the range this has, sideways to up. So you don't have to really be targeted to 160, 170, so on and so forth. You can play the sideways stuff and do pretty well. Now that's that's kind of the closest that triggered. Once again, take a look at the bull list. There's a lot out there. They're really good. Let's move to sideways. Sideways was difficult for me personally, folks, because a lot of the sideways I saw was more of a bear rally. I still see that in the overall markets themselves. However, UNH had a super strong candle. I like the range of the candle. Yesterday it had a super volatile day, or I should say big volume day. A huge shadow that came below that 490 level, almost touching the 20-day moving average, but came all the way back and closed up at the majority of that range. That shows strength. Now today's volume was not even close to what that wish-wash day, I'm going to call it the swip swap, right? It's people who want to be bullish, people who want to be bearish. Every single one of them are in and out of the stock. What it did today, however, shows a little bit more strength. So I would wait for a confirmation above the 510 level to play this bullish, but if you want to play sideways, I'm pretty confident or comfortable with that amount of volume and the price action that this thing stays above the 485 level. So somewhere around there. So if you want to play, hey, I don't think that UNH is going to get 520, 530, so on and so forth, there's a strong chance this thing stays above its 20-day moving average around the 485 level. Something to throw dart at if you want to be shorter term, something sideways. Now on the bear side, I got a couple. They're both low bases. They're both cheap stocks. What's tough about this is, do I buy the straight puts, wait for this to break down, or do I do something credit side? Do I do something sideways to down? It's up to you. They're great. They've just been underperforming. They hit bases. They fall apart. They rebase. Maybe they'll fall apart again. They're cheap. I would probably err more towards something sideways, some sort of a credit spread. Let's move on to the next one here. This is WBD. Same idea, exact same pattern, same price almost. Broke down off that 18 level through the 16 like it was nothing. Now it's at 14, consolidating sideways to down. You go for it. Targeted butterflies, sideways stuff, condors. It's kind of fun to play these levels. Now, why I like these trades is because they're, I don't want to say less volatile, because volatile is the percentages that it moves based on its price. I mean, this had a 1.4% move today, which is huge percentage-wise. However, a lot of traders just seem to be, hey, I can put a 1650 or a 1612 condor on this and be happy all day long. That's kind of what I'm shooting here for, folks, is you've got to absorb the volatility in the shorter term. I want you to stay shorter term because these markets are still in reaction mode. And Friday was a really optimistic day to the upside, but it's nothing but a bear rally at this point. We'll see where that goes moving forward. So we're likely to continue consolidating here at the recent gains. Friday was pretty optimistic. There's not much out there to push it down unless we see some numbers that are way off of expectations. That major sell-off that we had a couple of weeks ago was 100% based on an inflation miscalculation. Everybody was talking about, hey, inflation's peaked, inflation's at its high, inflation's going to consolidate and come down. Completely wrong. CPI came out super hot, and then we had a manufacturing number falling apart, which just exacerbated the situation. So when we're off, the markets react. If we're on, we can expect some sort of dull, boring, sideways consolidation level here. And it's at a perfect spot to do so. We got Case-Shiller Home Price Index. I can't imagine that does nothing but at least go sideways, if not down. And it's not about anything except for the fact that when you raise interest rates as aggressively as the Fed has, It's got to curb home sales. It's got to curb contracts. It's got to curb all of that stuff. So the next thing that's going to fall in line is home prices have to come down. So if this doesn't come down, I'll be surprised if it does. Understand, I don't think the markets react to it badly. They're expecting it to do so. Consumer confidence as well, I think, should at least subside, if not move lower. Two things that I really don't think are going to have too big of an impact. Nike came out, they were up about 1% post-market, and they've rolled over since. So I'm not seeing a lot of fall through with that. You guys, keep in mind that numbers are a really cool thing to follow, and unfortunately, or I should say fortunately, it depends on which side of the coin you're on. It's interesting to see if good news is rewarded or punished, or if bad news is rewarded or punished, because that just shows the sentiment of where the markets are at. Nike comes out as a consumer and has a better quarter than expected. So far, it's starting to slip. Its initial reaction was higher, and it looks like it's slipping a little bit. I don't know what it's going to do tomorrow. Your guess is as good as mine. But sometimes it's easy to follow the tea leaves to see where the general sentiment of the market is, so that if any bad news happens and the market's already pessimistic, we can expect a good move to the downside or vice versa. All right, guys, it's Monday. It's too early to tell right now, but that Friday move really changed things for me personally. So I think we might pin ourselves here for a little while without any sort of substantial move, or I should say a substantial announcement or news, bad or good. I think we kind of consolidate pretty much like we did a few weeks back when we saw that same consolidation. All right, guys, that's my 2 cents on the markets. Thank you for joining me, and we'll talk to you next time. Bye, everybody.